Welcome back. Now, South Africans working and living abroad are preparing for new amendments to the Income Tax Act. The expat tax means South African residents working internationally will only be exempt from paying tax on the first 1 million rand they earn abroad. Thereafter, they'll be required to pay tax on any foreign earnings. Well, what does this all mean? Let's get more with legal manager at tax consulting SA, John T. Leon. John T., good morning, and thank you very much for your time. Has there been an expat type of tax before? Is this a new amendment?
So actually this change in legislation is on an exemption in our Income Tax Act, and that exemption has been around for very many years. The difference is that exemption used to, if you met certain requirements, you could fully exempt foreign employment income from tax in South Africa.
So the exemption detailed what requirements you'll have to meet for you to benefit from it?
Exactly. And now the change is literally the same requirements must be met, but it's capped at 1 million rand now. So everything above that falls into our standard tax tables and is taxable.
So what kind of things you'd be taxed for?
So if we look at your foreign employment income, it includes your cash portion of your salary, but often when you're working abroad, you get housing provided to you, all these fringe benefits, security in certain countries, schooling, food, and all of those are seen as fringe benefits and are taxable.
What is going to happen now if you're working overseas and where you work you're paying tax? So you're going to pay tax twice?
So not necessarily. In our Income Tax Act, we do have provision for if you are paying tax in another country, you can claim credits on the tax paid there against tax payable in South Africa. We've also got double taxation agreements with certain countries in the world where you can then show that your taxing right falls in that other country and therefore South Africa should not be able to tax it.
Now, I mean, I'm just thinking here, so credits, is it one for one? I mean, the rand current is like 15 rand, just under 15 rand to the dollar. What do you mean credits? How does a credit look like?
I mean, if we want to make it really simple, you think to yourself, I'm paying 10% in Guinea, for instance.
10% income tax in Guinea? In Guinea,
but actually your tax rate in South Africa is 45%. Keeping it simple, you would have to pay the difference of 35%. It definitely is more complicated than that in terms of the
complication. Yeah, but I understand. We're trying to understand a little bit there. But now there are many South Africans who live and work abroad and who come, and some of them, they even send money home and all those kind of things. Yes. This is it's a proposed amendment to the bill.
No.
It's already been amended.
It was promulgated in December 2017, and for about 2 years before that, the discussions were already there. This is law on the 1st of March.
So you can't run away from it now as of from the 1st of March. So what would you advise people who are overseas for them to understand their circumstance properly? Do you have to start engaging with SARS early on to say, okay, this is my situation, these are my fringe benefits, this is what it is? Is that how you go about it?
I mean, in certain cases, especially from a company perspective, it's a good idea to engage with SARS. But also our Constitutional Court has said that the view of SARS should best be avoided. That is case law. So I don't suggest going to SARS to get your advice. You need to look at your own personal situation and speak to a professional that understands what you need to do and figure out the different solutions you have. And that could be financial immigration or making use of a double taxation agreement or just trying to figure out solutions to reduce your liability.
So any earnings above R1 million are taxable now if you work and live abroad.
Correct.
And any fringe benefits above certain things are also, like, once it hits that above R1 million, you can't get away from it, taxable.
Unfortunately so.
Yeah, so Edward Kisweta and SARSA want to collect more money. We just wish sometime that our state would be able to use it properly. I mean, 1 trillion rand tax base that we're all contributing to. Thank you very much. That's John T. Leon.